Major changes are afoot back home. The government of India has introduced a new income tax bill. The current one is 6 decades old, so the finance minister is overhauling it. When she introduced the bill, protests broke out in Parliament. A number of opposition MPs also walked out, but ultimately the bill was introduced with a voice vote. The next step is to review it. The bill has been sent to the parliamentary committee. The committee will now review and maybe suggest changes. After that, it can be passed into law. Now, I know there are obvious questions here. Why do we need a new income tax law? What was wrong with the old one? And will this affect your tax rates? Our next report has the answers.
The
Income Tax Act was originally enacted.
India is getting a new income tax law. The bill was introduced in Parliament today and is now heading to a special committee for review. Once passed, it will replace the existing law, the 6-decade-old Income Tax Act of 1961. Let's get the most pressing question out of the way first. Will your tax change? The answer is no. The recent union budget had introduced new tax rates and slabs. Income up to 12 lakh rupees is now tax-free. Those rates and tax slabs have been retained. Then what's the point of this new bill? To make the income tax code clear and concise. The existing law is quite bulky. It has 47 chapters and 819 sections. The new bill has 23 chapters and 536 sections, so it's significantly smaller. It's also a lot easier to read and understand. The sentences are much shorter. Complex legal jargon has been removed and more tables have been added for visual representation. Here's an example of that simplicity. The current law has a previous year and an assessment year. You make money in the previous year, say 2024 to 2025, but you pay in the assessment year, which is 2025 to 2026. Sounds a bit complicated, doesn't it? The new bill has removed the concept of assessment year, and previous year has been renamed. It is now simply tax year. Certain words have also been swapped out. The existing law has the word notwithstanding in a lot of places. That's being replaced with irrespective of anything. What's the idea behind this shorter, simpler tax code? A, it's easier for taxpayers to read and understand. And B, it makes tax litigation easier because there's no confusion about the clauses. Most experts have welcomed the move, but a few are not impressed. They admit the changes will improve readability, but they feel more should have been done. After all, this is a review after 64 long years. Nonetheless, it's a step in the right direction. If you pay taxes, there are a few changes that will interest you. Number 1, you will have more time to file updated returns. Let's say you made a mistake or forgot something in your filings. Right now, you have 2 years to update it. The new law will raise it to 4 years. Number 2, the bill has a taxpayer's charter. It lists out your rights and duties as a taxpayer. Number 3, explicit provisions for digital assets. Things like cryptocurrency have been defined as property, much like land, shares or jewellery. This is clearly a much-needed update to India's tax code. The rest is up to the Parliament. The MPs will convene again on March 10th. After that, the bill will be put to vote. If passed, the new tax law will come into effect on April 1st, 2026. So there's enough time for a full dissection.
We're calling the show Vantage. We hope you like what we've put together for you. Touted as the minimum defense from that video. India's neighbours were the first to send the special edition of Vantage live from the White House throughout the city. Hindu Mandir in we're on our way to Tel Aviv. City measure, but it's also the perfect way to drive.
I don't think that
Prime Minister of Bhutan, Sherin Tagwe. Welcome to
60% of the world's
office. Prime Minister Modi did the iron.
we were actually
How are you doing? How do you like? It's been 1 year since that meeting. Iron bars separate you from the outside. Out the vote effort. Trump had, it says, and at $4.3 trillion. 300 billion by 2030. That's what we need to tackle climate change.